Yeah, so maximum pessimism is towards global financials right now. So especially, I mean, because again, so it's for globally, when just to see where is the worst, all that pessimism is concentrated in, and that's Japanese banks and European banks. We had all this dilemma around Italian banks, rising non-performing loans, and the fact that the yields are negative, or bond yields are negative in Japan and Europe, putting pressure on banks' profitability in those countries. And so market expectations gone so far that now assuming, extrapolating that yields will be negative forever, or and the profit pressures on banks to continue. But whereas we look at the dynamics, the changes in central banks' dynamics right now, the QE program is actually being twisted in a way that it's supporting banks now. So we have a very cheap market, pessimistic sentiment. Everyone's run away. Most global funds don't have any exposure to those banks, but at the same time, things are getting less bad. So that really, for us, it ticks all the boxes. Sure. For example, if you look at the price to book measure, which is a well measure to look at banks' valuations, Japanese banks are running on price to book of around 0.5. European banks are running on price to book of 0.6. So these sectors are running well below replacement cost or book value. In the same measures in Australian banks, about 2. So we have multiple times more expensive here, the banks here, than they are overseas. And then when you look at those banks, they've gone through a shakeout. So typically we like to buy markets which have gone through a shakeout or cleansing process, where they come out of it more efficient and lean, and they can just have a lot of operating leverage. So one sector of the Australian market that ticks that box right now is the mining sector. It's gone through a massive cleansing process, and now it's come back much leaner, much more efficient, and global growth is broadening, and the sector is still cheap. So whereas, when we look at our Australian banks, they're well run, great, but it doesn't have the valuation, doesn't pass the valuation requirements that we want.